Hello guys, in this video I'll discuss a very important, very powerful, very practical concept when it comes to trading, especially scalping, that is open high, open low concept. But even though you might have heard about this, but very rarely people understand this, and even very rarely people make money with this concept because a lot of confusion are there, a lot of things you need to sort out with respect to this one. Even I also have differences of opinion when it comes to open high, open low, and how we look for the trade. So I always talk with probability, I always talk with numbers. So here also I'll break down with the probability, with the numbers, when this open high concept which is prevailing in the market will work, when it will not work, when you should take the trade, and all those things, right? So especially if you're a scalper, either from my side or from many other good scalpers which are discussing this strategy, you might have heard this. So I'll be giving you my perspective on this, on what is open high, what is open low. See, what I've seen is a lot of traders who have seen this have seen the surface of it, right? They hear that the first candle has open high, or if you see the first candle have an open low, then there is a definite trading opportunity, right? There is nothing like a definite trading opportunity when you come across that setup. And understand this one, that mainly people talk about is for scalping. And it is not that you saw that open high and you take a trade or a contra trade and you keep holding that position till the price comes to open high. Open high is because of heavy selling pressure also. So if you are someone who's looking for a scalping trade, when the level comes, that can work and the probability is also higher. But when and where is what we need to understand. So the problem is we need to understand what is the logic behind it and why does it work in some cases, why and when it should not work, when should we trade that, right? That's most practical when we are looking to scalp that, right? And when should we avoid it, that is even more important. And how do we increase the probability of this setup? So that is what I'm going to discuss in this video, and we will understand it properly. So this is my perspective to open high, open low. So once you complete this, I'm sure that you can understand what I'm talking about. Means definitely your view on this will change and your trading style will change on this particular strategy. Either you will completely avoid it, or if you're trading this, I'm sure that you can increase your probability of this setup. So let's start with the basic definition first. What does open high means? You look at the first candle. I'm talking about the first 5 minute candle. Okay. You see the opening of the candle and the high of that price. So a candle will have an open, a close, a high, and a low. So open price will be the high of that particular candle. So the highest price of the first 5 minute and open is the same, right? What does that mean? From the moment that option contract opened, or if you look at it, the futures, or if you look at it, the spot, wherever you see open high, when the moment it opened, it started seeing what a good selling, right? It could not move higher even once from the level of opening. So open is the high. So from the opening, it is never making a new high, right? So opening itself is the high and it just kept going down. So how will you interpret? It could be a big selling pressure, right? So it's opened at a certain price, let's say 100, and it never went above 100, not 101, not 100.5. It started making new lows only, and that same price is the high of that particular candle of that particular time frame. But the candle is moving lower, and it does keep going lower also. So this is very important because it's not a any random candle in the day. I'm talking about that candle where it opened high, also same, not any attempt to go up. Further it is going down only. So I'm not talking about second candle, I'm not talking about third candle, I'm only talking about the first candle. So the first candle, I'm only talking about open and high are the same. I'm not talking about opening and then moved higher and coming lower. No, right? So I hope that is very clear. So that is the first rule. Only the first 5 minute candle is what we consider. So in the same way, when we talk about open low, what does that mean? Open and low is the same. So candle opened, let's say at 100, then it is never going below 100, not even 99.5, 99, or any attempt is not there towards the down. Open and low is the same, it's just going up only. What does that mean? Good buying is there, right? So this setup is basically telling us what? Right from the market open, some kind of directional pressure is in the market, right? That is actually present in on that particular, either it could be an option contract or it could be a futures, right? So open low means there is a one side buying pressure coming. Open high means there is a selling pressure come from the opening itself. But this alone is not enough to trade. If that is the case, then everyone can make money, right? You saw the open high and then jump onto that trade. By looking at open high, you sell the market, or by looking at open low, you buy the market. That's not the way, right? That is actually the mistake most people make, because there are some people who are believing in the reverse also. That is what I need to discuss. When it is open high, there are many who will look for a reversal trade by expecting that open high will be touched once again. But there are a section of people who are believing that it's an aggressive selling, so they will go on the downside. So that equilibrium is what we need to find out, and what exactly is the logic we need to understand. Let's understand this very carefully. Just because, let's talk about options, at the money options. The option shows the open high. Does that mean, automatically you should buy it, or you will buy and hold it immediately and you're expecting a target of open high itself? Because initially, if you see that the probability is 50-50, right? And then it's a very important thing. Just because someone told you that open high, there is a high probability that it can hit, because the interpretation is why this open high is coming. There is another interpretation. What we are understood now and what I told is this, right? That is the practical thing. Secondly, there are other interpretation. Based on that only, people will take counter trades. In fact, I also will take counter trade. That is what the scalpers will do. Where you need to take is what I need to discuss. The counter trade possibility, going not in the same direction. Why it happens is because some big players, they'll come, they'll deploy, they want to take it to one side. So if they want to buy the market, they want to take it higher, what they do is at the opening itself, they will buy heavily. So when they buy heavily means you punch the market order. So when you punch the market order, it may hit at a higher price also. Sometimes you'll see in futures, though spot is trading at, let's say, 23,500, sometimes futures are traded at 24,000 also in that pre-market settlement, and immediately after the market opening also you will see. That is because aggressive market orders placed. And because of that itself, that price is not touched immediately, because that was a market order placed at the opening, and that got triggered at a high price, which is not the actual price of that instrument. That is why after that it is trading lower. So since this is a bigger player, that player is coming with a good money and he can take the market further higher. So this is one of the assumption, and based on that also we will be discussing the trade possibility. So understand, when you see open high, it doesn't mean automatically that you'll be buying and holding by expecting that big player will take the market immediately on the upside. It can come after any time also. But when you are trading in the options, that premium decay will be a big issue. So initially, when you look at it, it is 50-50. Whether I take a trade on the downside by assuming that it's a big selling, or even if I'm assuming that a big buyer have bought it at a market price, and that's why the price have gone to that high, and not since then it has started falling, and taking a counter trade, whatever, it is a 50-50 probability, and we don't want to play with 50-50 probability. So this is a most important thought process. So we are not going to enter the trade immediately, right? If a contract has open high, there are two things possible. Let me confirm it very clear. Firstly, already I've told this, right? It might have been aggressively sold at the opening. The one who came directly started selling, or it may be simply reacting to that, temporarily, and later it can recover strongly. Like I told you, the prices, let's say, maybe actual price is 95, but the one who came and punched the order, who's expecting the market will go up, or will he himself will take the market higher, who's a big player, might have punched the market order, but not his entire quantity, maybe 1/4 he will deploy. So what will happen is, actual price may be 95, but you will see sometimes it will be triggered at a higher price when you place the market order. So that could be the reason why open high have created, and after that it is trading at the normal price. So he may come back again and he will take the market higher, maybe later. Definitely it will have to come to open high. That is one of the assumptions. So there are two possibilities. It might have even aggressively sold when you see open high. That is why open and high itself is the same, or it may be reacting temporarily and it can later recover strongly. So the setup is very clearly visible, but the direction is still not fully confirmed. You just saw open high, just saw open low, the direction is completely confirmed. So we need some parameters. Now, what are the parameters? We need additional filters that will help us to understand, or help us to say that now the probability is increasing. When we started off with this open high setup or open low, it is 50-50. Now, when we add these parameters to that, I'll tell you what are the parameters, and I'll demonstrate that in the live session also. So if you're attending the live sessions already, you know that, right? Otherwise, we'll be looking into that. So those who are interested, we have the 4 days live market mentoring sessions, one month mentoring sessions also. So if you're someone who's working professional, you can join for 4 days and you can, understand how things are done in the live market where I trade and I teach and I explain things. So you can watch that and you can correct your psychology, you can correct your understanding if you're a working professional. Otherwise, if you're fully available in the market, you can join us for 1 month and change your trading style completely. So what we are looking for is some confirmation, right? Without that, open high is only an observation, and that's not let me tell you, just because you saw open high, you cannot interpret on either side. Just simply, you can't take it as heavy selling and you will go on the short side, or it may correct. That assumption also you cannot take, and it will come to open high and you cannot buy, or a contra trade also you can't take, because initially it's 50-50. Now the parameters that we are going to take, the two important confirmation tools, right? This open high setup that we have seen, if you want to convert that into a tradable setup, what do you mean by tradable setup? It should be part of my system or my setup. For that, I need to have a higher probability. So what we can use is, we can use this method. We need two major confirmation and two important indicators that I use that you already know, right? That is VWAP and 20 EMA. These are the two main filters. So this two indicators will filter out whether I should be trading this. The logic is very simple. If the price is not able to regain strength above these two reference levels, if it is open high, came below, now if it is not able to claim that 20 and VWAP, I'm not going to look into that, right? So then the open high is still weak. It could be aggressive selling which have happened. But when the price starts reclaiming, I often term this as VWAP reclaim or 20 EMA reclaim, that it came below and claiming that. What does that shows? That shows that strength, right? If the VWAP reclaim is happening or 20 EMA reclaim is happening, and these levels, the price is coming again and again, then the probability of reaching the destination becomes much higher. So it's not a blind setup. Some of you might not understand even when I discuss this. They need real experience, real market understanding. That's why I have the live market session also where I explain and demonstrate this. So remember, this is not a blind setup. It is a conditional setup. So you saw that first candle, you saw that open high, the price is coming down. Initially, we don't have a trade, but you saw that the price is reclaiming VWAP, the price is reclaiming the 20 EMA. Then our assumption is getting validated, our probability is getting increased, and you are not trading just because the open high appeared. You're trading when the market starts supporting that move with a proper structure, that it is coming to VWAP, it is coming to 20 EMA. Now, after 5-minute candle, once it is formed, you understood there is open high or not, right? And our setup is valid when it comes to open high or open low. Now what we need the VWAP to form, right? Once you see the first 5-minute candle, you will get the VWAP. Otherwise, you'll be seeing the previous day VWAP. Then you will see the present day VWAP also. And we do not rush. We wait and we observe how the price is behaving around VWAP. Most of the time, what will happen is the price comes to VWAP, it get rejected. If it is aggressive selling, it will be supported, right? It will get rejected. If it comes to 20 EMA, it will get rejected. That rejection level is very important. That tells us that, the contract is still under pressure. So you saw open high, it is moving to VWAP, getting rejected, moving to 20 EMA, getting rejected. So initially itself, you saw that it's under pressure. That's why open high. Now coming to VWAP and getting rejected, again, it is under pressure. But the moment the price finally close above VWAP and it is sustaining there, then the setup that start becoming more actionable, and that is becoming more tradable now. Before you have taken the trade, you will eventually end up in theta decay. Now the moment it closed VWAP, now this is where it is actionable, where you need to take action. You should see, knowledge alone is not going to give anything, right? You have to take action if you want to make that knowledge, convert that knowledge into money. So VWAP is like, acting like the first major filter, because it helps us to judge whether the contract is recovering in a meaningful way or not. So once that first filter is cleared, now comes the second filter. What is that? 20 EMA. It is equally important, right? The rule is very simple. Price should not close below, it should never get rejected or close below VWAP or 20 EMA. Price should close above both VWAP and 20 EMA. So 20 EMA is indicating in 5-minute short term, it is now turning bullish. So the chances of hitting that open high is higher. Above VWAP reclaim happen means again the price is gaining strength. Only then the setup becomes strong enough for the execution. Now comes the action part, right? So if price cross only VWAP, now, but not cross 20 MA, that means it's stuck between 20 and VWAP, then the confirmation, is incomplete. So we are not going to trade that. If it cross 20 MA, but fails to sustain above VWAP, still it is between 20 and VWAP, again, the confirmation is incomplete. So what is required? Two filters. It definitely have to cross it because we are seeing this as a selling pressure. It is reclaiming that level. So both required together. So VWAP need to be crossed, 20 MA need to be crossed and closed above that. And this is what actually convert the low probability idea or that 50-50 probability or even low probability, because we are going to take a trade on the upside despite seeing open high into a high probability trade. And the risk reward also will be very high here. And we know where is going to be the target, and target, I'll come to that. So I'll further try to make it very clear. So what we need, let me tell you the rules once again. First 5 minutes, right? So let's talk about open high now. Open high low is also the similar. So first 5 minute candle, you must have to see open equal to high. Opening itself is the high, right? Assumptions, two possibilities: aggressive selling, I've told you, or a good player might have taken it at a market price. He might have deployed few of his capital. Later, he will deploy more and he will take the market high. So these two assumptions are valid. Now, first 5 minute candle have formed. Then you are going to wait. Let the VWAP form. Observe whether the price regains VWAP, reclaim VWAP. Observe the price action at VWAP. How many times it get rejected? Maybe 1 or 2 times it get rejected. You also need to see what is happening at 20 MA. You see whether the price close above 20 MA and VWAP both. Not between 20 MA and VWAP, not above 20 but not VWAP, not above VWAP but not 20. It should not be between that, it should be above both. Only when both are satisfied, that trade becomes valid. Now the role is you have to take the action. That means the setup is not about catching the move instantly by seeing open high, right? It is about, you're allowing the market to prove that the contract that you are trading, it could be futures, it could be options, it could be mostly at the money option, is recovering now and coming into that momentum phase and now has the potential to move toward that first candle high. So what is the destination in this trade? This is a destination trade. So the destination is open high, but we won't wait till the open high to be touched, maybe a 5 point or 10 point below. We'll close it because we also take into consideration some time decay which happened during this time that I have to show in a real market in practical sense, right? Without that, if I explain howsoever, it won't make sense because it can even break that and go higher. But at open high, what can happen is there can be a rejection, and that rejection, which will be followed by further buying. But that rejection may come even before 5-10 points also. So we don't want that rejection to come till again 20 MA. By that time, it may take your stop loss also. So that is why maybe 5 or 10 point below, we try to exit. The first candle high is what we need to see, right? And that itself is your ultimate destination target for the set. I hope this is very clear. Now the question is, yes, I got the confirmation, I entered. What is the stop loss? You have taken the entry, right? So see, we will have to use a practical approach here. You can the earlier cases where I used to discuss that one candle stop loss, right, and technical stop loss, etc. Yes, you can definitely use a technical stop loss below VWAP and 20 MA because we entered based on that. In case if the price goes below, the condition is invalidated, so you can exit. That is one thing. What you can do is you can keep stop loss below the last swing low. That is because it's a destination trade, right, or the recent structural low which has been formed before that breakout of VWAP or 20 MA or that breakout candle or VWAP or 20 MA both together, or any one of it is breaking down, you can keep it, right? So see, again, this case here, I have to leave it to you. Either you will have to keep it below VWAP or 20 MA, or you have to keep it below the breakout candle or the structural low which has been formed or the swing low. I'm leaving it slightly depending upon your risk appetite for this. But the important point is stop loss must come from the structure and it should not be emotion. There is no random points. You cannot simply keep a 10-point stop loss for this. If you're trading the setup, it has to be from the structure, right? You cannot simply take a trade and I keep 10-point stop loss. It may come down because there was a selling pressure already. So it can dip also. So structure is very important, not random points. No, again, let me give, some extra rooms. You should not do that also, right? Because if it the moment if it comes below VWAP or 20 MA, you should exit. Don't think that maybe it will come back. All these are against your rules. So don't give some extra space or extra points. At the same time, it cannot be random small points as well. It must come from the chart. It must come from the structure. It must come from that indicator. Now, the destination concept, right? Already discussed this. One of the most powerful part of this setup is the idea of destination trade, right? We are talking about open high. It will reach there. The market is going to take it to that level. So in this system that we are discussing, the high of the first 5-minute candle is not just a random number. That's the open, that's the high, that is the destination for this trade, and you're actually trading for that level. It means once all the parameters that we discussed, the 20 MA, that VWAP, the close above 20 MA VWAP we got, the parameters are fulfilled. Now the contract that you're trading, the option strike price that you're trading, or the futures that you're trading now has a realistic chance of traveling towards its earlier high. So that is your destination. So instead of taking random profits in this case, you have a clear roadmap. In other cases, we have random profits, exits also, one candle, two candle, like that, right? Maybe, you can have the first minor target, second a structural target, and finally the open high destination also. That way also, if open high, the destination is far from 20 MA, then you should have this first candle or a minor target, a structural target, which is the previous, a structural high or the swing high, and the final destination. So 3 ways you can exit, and this gives a very proper structure for the trade and a higher probability for the trade if you follow this rule. So this is a concept I want you to understand and see. A structured trading, if you do like this, is always better than emotional trading. So someone told you open high, so I take a counter trade. It will hit the open high again. At any point, you're going to fail big in this market, because that point for probability is 50-50. Your risk is more higher also. You're going to fail big time, right? But when these conditions are met, you are increasing your probability. That's what I want to discuss, right? Now, again, the question is, does it always hit the destination on the same day? No. Right? And this is very important again. Sometimes you see open high that does not hit on the same day. That does not mean that the concept failed completely. Sometimes you'll see the contract moves partially, form a base, and then next day or even later, if the structure improves again, then still it is valid. The probability of reaching open high can increase once more also. That structure should remain the same. But since we are trading option, I prefer to keep it for intraday. Otherwise, as a buyer, if I'm a seller, then it is beautiful, entirely opposite, and I can hold it also for 2 days, 3 days. That way I can hold it, right? Instead of buying a call, if I'm selling a put, I can just hold it 2 days, 3 days. It just give me the decay also. So this is where the setup becomes more advanced also. So the same is applicable to sellers if you try to do it in the reverse way. If the same day destination is not reached, then the next day what you will observe, where the price opened, where the VWAP forms, whether previous key levels are reclaimed, whether the 20 MA and the VWAP again support the move. So the setup can evolve into like a multi-session destination trade. But this second part, this advanced part, this is not for buyers. This is for sellers. And if you are a buyer, if it is a monthly buying, okay. But if it is a weekly buying, there is no point in holding that trade for 1, 2, 3 days like that. So that is why observation is very important. Even though your setup and everything is there, observation is very important, right? Right, guys. So this is a very, practical setup. But again, you have to observe, you need that experience. Probability is not treated like a switch. It's again based on probability. It is treated like a progression, right? For example, if the option chart is reclaiming that important level 1 by 1, what does that mean? The probability of open high is becoming more increasing, right? So it will reach to that destination, because this the chart is actually claiming. First, it reclaimed the 20 MA, then it reclaimed the VWAP, then it is reclaiming the next swing high and breaking that lower high formation, going further higher. So that probability is increasing. What does that mean? So the first support held, that itself is increasing the probability. Next, resistance crossed, right? Probability increased further. VWAP reclaimed, your confidence rising further. 20 MA crossed and sustained, confidence rise more. So all these are increasing your probability, and there's a much better trading mindset, than simply saying there is a setup, there is an open high, I've seen in the live mentoring session also, so there is open high, open high, open high, jump onto that. There is no point in doing that unless these conditions are met. The open high alone is not a trade setup. Open high alone is something where you can take action. Open high coming with these parameters, these setup and matching all these and increasing the probability and giving confidence, then I'll go for it. Now the quantity, something which I need to discuss, right? Very, very important place where traders go usually wrong. Many traders think that open high is a final destination, right? And then they must hold full quantity till the end. But that's not necessary. What is the practical approach? See, as I always do, you keep the keep trailing profits, right? Your probability of getting the first candle in your favor in your best probable setup is very high, 70%. Second candle in your favor consecutively, 50%. Third, three consecutive candle in your favor, probability is getting reduced. So understand that. So when trade goes 40, 50 or 40 points in your, again, depending upon the instrument, if it is Sensex 40, 50 points, if it is Nifty 15 to 20 points or 20 to 25 points, reduce some quantity 1/3. And if it retraces to EMA or VWAP again and taking support again, add again, re-enter again. So you get more quantity to be added, right? So if it continues again strongly, you can trail rest of it. So this is how you should be doing, right? The moment it gave 40, 50 points, now you are booking that and you can re-enter. And if it breaks, you can exit. If it is further going, you can trail it. Very important because many times price goes close to open high also and reverse. And that is why I told you 5 points below, depending upon the instrument, sometimes 10 points below, depending upon the time taken also, because we consider the theta decay part as well. So the goal is not to act like a hero. The goal is to extract the value intelligently, still by keeping a portion of your full destination to reach. You know, it can have the probability to reach there. So, but we won't keep the entire quantity. The idea is, yes, we keep booking, we re-enter, and we trail, and few of the quantity will keep for destination. But that also not exact open high, just below that. There also we consider some buffer. Looking at the time it take and everything as an option. Wow, option seller. Yeah, this is a beautiful setup. Just do the reverse, no time issue or anything. Wait till that price itself, right? So when the moment you see call open high means put would have made better lows. So you'll get more profits in that. So why this setup is effective? Let us understand very clearly. It is useful because it is very objective. And I've discussed with probability, I've discussed with numbers, and it starts with a very clear force candle condition. So there is a conditional setup is what I've discussed. It adds confirmation through VWAP. It adds again confirmation through 20 MA. It adds that trend filter through 20 MA. And it provides that structural stop loss, not a random stop loss. And it give a destination target also. So you have a structural stop loss, you have a destination target, you have a condition for the entry, three conditions, first candle and VWAP 20 MA. So this is not just a pattern like you see cup and handle or double top, double bottom, right? It's a full framework. And that's why it becomes highly effective. And it appears frequently also, right? So it's not some rare setup, right? Like we discuss sometimes CPR, Virgin CPR coming along with Camel 11. These are rarely, maybe 1 or 2 days you get in a week. But here, this you will see sometimes, at least 2, 3 times it is possible, right? You can easily see. And it can appear almost every day in one strike or the other also, especially in active index options. But again, appearance is not enough. I want this to happen not on in the money. I don't want this on far out of the money also. I want it should be 40 delta, 50 delta, 60 delta, nothing beyond that. So the trade should only be taken when the confirmation are there. And that's where, you know, the most important part that I always discuss, discipline that separate a trader from a random participant. I'm talking to traders. I'm not talking to market participants. You might be a market participant, so you find it boring. But if you're a trader, you understand the value of what I'm talking about. So that's why I'm not talking to a market participant. I'm talking to someone who's trading in the market, right? So now let me give you the deeper lesson behind this entire setup. The setup is very simple. I hope this is very clear now. But what makes it, work is not its simplicity alone. What you need, you have a structure. You are having the condition. You definitely need to have the patience because you need to wait for the confirmations, right? What does that patience means? Confirmation about 20 and VWAP. You need level by level observation. Are they keep on making lower lows, or are they breaking the structure? And finally, the moment all these parameters are met, you need action. I told you again, knowledge alone won't give you money. Convert that knowledge to money, you need action. So the disciplined execution. I want you to be a trader. I don't want you to be a market participant. Many traders see open high, they just get excited. I told you in my live trading session that people cry. So look at that, open high, open high, open high. So what I need to do, despite telling all this, still if you're doing this means you're a market participant, you're not a trader, right? But the correct approach is not getting that excitement. The correct approach is, let me wait, let me see whether the price is coming above VWAP or 20 MA, giving a confirmation, then the probability will increase. I get a proper setup. Let the market prove itself. I don't want to get excited. Let the market prove that this is a tradable setup. This is where I have to take action. If I'm not taking action here, then my knowledge is useless. That mindset, guys, that itself will improve your trading. So what we discussed is, when I say open high means what? The first candle, 5-minute candle I'm talking about, has the open and the high. But that alone is not enough. The setup becomes tradable or actionable when the price tests VWAP, may get rejected, but reclaims VWAP, close above VWAP. Also the second filter, that is 20 MA, and the structure support the move. When I say structure support the move means this lower low formations have broken. So the structure is broken. Now, after both confirmations and the structure also confirming, you will enter. See, the moment you see that and you see the 20 MA and VWAP is breaking, definitely the lower low would have broken. That I can tell you. That is definite outcome. And enter after both confirmation. Stop loss I told you, below the recent swing or structural low. It's a destination trade. That open high is the destination. But again, if you're an option buyer, we also need to consider the time decay. Similarly, we are not completely keeping the quantity for open high. We keep exiting depending upon the instrument, depending upon the points you get, re-enter, keep trading, right? So take partials, always partial booking of profit when the move is in favor of you. Never leave profit on your table, because it can reverse even just before that, also in between also, right? And if you can get a re-entry opportunity, add and trail till destination. So one more point, if the same day destination is not hit, it can hit on the next day. Observe the next day structure and reassess the probability, but that doesn't mean you need to hold it. As an option buyer, you won't hold it. As an option seller, you can definitely hold it with the hedge. As an option buyer, what the best we can do is, next day, we exit today. We don't want to hold unnecessarily overnight. Anything can happen. Premium decay, if nothing happens, premium decay will happen, right? Even if slightly positive, still premium decay can happen. So we exit, look at the structure again on the next day, and we can trade for the same open high next day. So the real power of this setup is not just that, you are identifying a pattern, right? Whatever I discussed, in fact, I taught you to think like a trader. It's not about a market participant. First, you need to do what? Identify that. Then confirmation, then execution, then management. So this 4 is what you need to do as a trader, and that's what separate you as a trader and a market participant. You identify, you confirm, you execute, and you manage. Now, when you attend our live session, what you will understand is the way I identify, you will see. You also will identify, and then I'll confirm this live in front of you. I'll execute it live in front of you so that you will also get the confidence, and I'll manage it live in front of you. So think about this. 1 month you're doing along with me, your entire psychology will change. What if it is 1 year, right? What if it is as long as I'm doing, you are with me? Things will change entirely, right? Even I also keep evolving, learning. You also doing the same. So this is how this setup is becoming tradable, and it's not blind execution. There is no emotional execution, and there is no hope here. We are not trading based on hope, but we have a proper structure. We have a proper probability, and well executed and well managed and well disciplined, right? That's what makes a setup truly useful. So that's about this concept, guys. So if you would like to join us in the live market mentoring session, that's why we have the live market session. I know there are limitations, even though I have discussed this much. I don't know how much you absorbed, how much you understood. You might have understood if you're brilliant, but Knowledge alone is not enough to make money. What you need is action. Especially when it comes to trading, you have to see someone doing it in front of you. So if you're interested, join us. I see you there. Thank you.